All right, we are live. Ask Me Anything BYOB Money Mentor team here live and direct from all over the United States of America to answer all of your infinite banking questions.
Jeff Wild is saying, can I be approved for a whole life policy if I'm 51, had a heart attack, and use nicotine?
I think that we'll go to Linus, but I think that'd be challenging. We'd probably be looking who else is an insurable interest that you have. It's going to depend on when the heart attack was, how your health is, et cetera, et cetera. But we could always go to preliminary underwriting, but depending on if it was rather recent, it may be a decline and need somebody else that's insurable interest. Anything else to add, Linus?
Yeah, that's about it. That's what I was going to say, is get some extra details about that heart attack, any extra details he might know, and go to preliminary underwriting.
And so to do preliminary underwriting, would the first step be to get on a money mentor call with somebody and then just express that you might need to take that path? So to that, I'm going to put in our round robin link in the chat now. So everybody can have it, but mentors.beyourownbanker.com. That'll be the quickest way to get you on a phone call with one of these guys, and then take it from there.
And sometimes it's good just to know, like, even if we know it's going to be a decline, it gives you a kind of a peace of mind if we go to, the 5 A+ rated or better mutually owned dividend paying whole life companies that we partner with and say, hey, would you consider this person? When they tell us no, at least you have a little bit more certainty that there's another solution potentially if there's other insurable interests, whether that's spouses, children, grandchildren, siblings, business partners, etc.
Okay, guys, let's fill this time until we get a question.
So Carson, I'm curious to hear more about how that went talking with your father-in-law about the infinite banking concept, or maybe the discussion didn't go any further than just reviewing what he was looking at doing.
Yeah, we can talk about it. It was just funny. It is a very traditional mindset, as most of America does. He's, in his 60s, he has a business that does well. And so I feel like he's one of those people who just like has money, has the way he does things. And he's like, all right, I know what I'm doing. I'm going to just do my thing. I don't want to learn something new. Mm-hmm. So that's where I know his head's at. So it's kind of an interesting conversation, because that's how most people are, honestly, when they get to that age and they have their own stuff going on. So it was a good conversation. And he understood what I was doing, because he has life insurance and he has whole lives he's taken loans from. He's done stuff like that in the past. But the idea of banking didn't make sense to him. The idea of control didn't make sense to him. It was more just a product. And he's like, well, I have products too. So it was a good conversation. But it was just another one of those conversations you have with most people, a very similar conversation.
Yeah, I'll bring up the case that I brought up with our team call here earlier today that was very unique. So this was an individual, everybody, that they have an annuity that is not doing very well. I think it's a $130,000 annuity that made a few $100 in the last 12 months. So not something they really want to keep. Cost them about $6,000 to remove the annuity and to convert it to cash. And the individual currently doesn't have a lot of income, has about $10,000, $12,000 of income per year. His spouse has about $50,000, $55,000 of income. So that's the situation. So they're trying to look at how do they get that money that they have in the annuity, doing something better for them, working for them in a better way or safer way and a more predictable way. Yet he's challenged, by the way, with his income, being able to qualify for a policy. The spouse is type 1 diabetic, which usually makes it very challenging to do infinite banking on that individual. So it's a very unique situation. And this person was a little kind of despondent and didn't really know what to do. It was kind of like, and they're 60 years old, by the way. So they feel like they want to get something going very quickly. And so they hopped on a call after seeing, I think they saw me on the Tuesday webinar. They hopped on the call with me, but they were already of the mindset that this isn't going to work. That's literally what this person said. So this is what this person said when they first got on the call. It was, Brian, I don't want to waste your time. I want to be very respectful of your time. So just tell me this isn't going to work. That's literally what they said. So when we talk about infinite banking, mindset first. Mindset is the most powerful thing. They already were of the opinion it's not going to work. So the call ended up being 90 minutes. And he was trying to keep it as short as possible. It ended up being 90 minutes. So here's the solution that we're coming up with this individual, because we come up with solutions. We solve problems. And so one, I talked about him about his mindset. Why don't you think it's going to work? And within about 15, 20 minutes, his mind had completely shifted to saying like, holy cow, this is possible. Like, yes. So we can't insure the spouse, but we can insure him because the spouse is not insurable. So you can insure another body. You would go to her first, but since she's uninsurable, we'd go to the second person, him. Now, what can you do with 130,000 of capital when their income, they're having a hard time with the income and the premium deposit? So here's some solutions that we came up with as a team on our previous call. So remove a portion of that annuity or all of it and fund a policy with a lower premium and the maximum dump in. So now you've got the policy working for you. Now you take the rest of that money that's in that annuity. Here's some options. Private lend. We have the private money club. You lend the cash and you lend the cash value in the policy out on private deals. That return comes back in. You use that to fund the next annual premium next year. All of a sudden, you have a policy that is now perpetual and moving, and they got the money working for them. Another option we came up with one of our team members is take the rest of the money, the cash, put it into an annuity that spins out a higher return. And once again, take that return, put it back into the annual premiums. And those are just a couple of the solutions that we came up with for this individual. So now they're completely looking at this differently. They're saying, I can get my money out of the annuity. I can put it into a vehicle where I can control it. It's safe. It has guarantees. It's going to grow for the rest of my life. I also have that generational wealth, that death benefit that can be passed on tax-free. All of a sudden, their situation is completely changed. And so I want to note that part of what we do is we help you with the mindset side of it, seeing what is actually possible, because you might be thinking, this isn't going to work for me. But in reality, until you have that conversation with us, you don't know. So kind of a cool little story, and we're helping someone do some pretty amazing things and solve some problems.
I love it. I learned a lot on the call. Well, like through you just talking through the process, I've been able to learn a lot from it. Can you talk more about what the mapping team does?
Yeah, the mapping team is also called the implementation team. And what they do is they will take your needs and goals of what you're trying to do with the infinite banking concept and actually help you implement it. So it's changing right now. We're in a little bit of a flux in terms of like we're evolving the mapping team and the I team. So let me just give you the vision of what's going to happen in the future, which is already happening for all new clients. Is we're going to create the reports for you, whether it's Debt Blaster, Gains Projector, or any of the many tools that we've created here to solve your problems. Once those tools are created, they basically follow you through underwriting. And then once your policy is issued and funded, that report, along with your illustration, is going to be kicked over to the implementation team, where you'll be assigned an implementation specialist, and they'll reach out to you. And really the goal is for them to actually put the boots on the ground for you, to get everything you're doing with the infinite banking concept, everything that the report that you and the concierge team has gone through, and actually put that in motion and actually get it working. So, all this stuff is great when you hear about how it does all these things, but it's actually where the actual process gets started. The loan gets implemented, the loan repayments get structured, and then every quarter they reach back out to you to, progress check, make sure you're doing what you're supposed to be. And you can always reach out to the I team. The I team, and, again, mapping team, I team, kind of two different names for the same exact thing. They're also there if you need to change beneficiaries, change your mode of deposit. So if you're funding it annual and you want to change it to monthly, the I team would be who does that. If you want to change ownership on the policy, or you wanted to change anything, an address, all that is done by the I team. Or just if you have questions about your policy, the I team would help you there.
Perfect.
Professional hand-holding. They're there.
Yeah.
Exactly. That's exactly what it is. It's professional hand-holding that our clients get that no other IBC company or insurance company out there does. And we are exclusive to doing that for our clients. There's tons of other people out there that say they'll do IBC and help you build your policy, but they won't help you implement your needs and goals. They won't help you implement the infinite banking process. We say this a lot, and I think it's another point for me to say it again. It's not the policy that's going to get you where you need to be. It's not the policy, the specially designed whole life, that's going to solve your problems. It's the process. So that hand-holding, that implementation team and concierge team, which will work as one unit, that is the way and the reason why you'll be successful and why all of the stuff that we talk about will happen. The policy is just the place you run the money through. Don't give it any more credit than that. It's just what you run the money through. It does some really cool things, gives you some great benefits, but it is not the thing that's going to change your life. It's certainly the process that's going to change your life.
Good point to bring up there, Chris. And it's kind of funny. I got a couple text messages from an individual who's wanting to run illustrations with 4 different companies. But I'm having to explain to this person that you're getting hung up on the numbers. We want to talk about the process of how you're going to use the policy. That's where the magic is at. It's not in the, what's the numbers on this illustration versus this one, different companies. You're getting lost in the weeds, and you're looking at it as a return of investment, which is not. The process, how are you going to leverage this? What's it going to do for you? What's it solving? That's where, as Chris just said, that's where the magic happens.
100%. Yeah, I mean, and I think that's such a hard thing because we're just trained and just brought up in a society where it's all about product, because that's the tangible thing. That's the thing that you're buying. And we always exchange money for something, and that's what we think solves all the problem. And in some cases, that thing you buy does. But in this case, it's more so the process and how you use the widget being the whole life that actually makes the difference. And I Brian, when people, sorry, Carson, when people say that to me, when people are like, I want to see 4 illustrations all designed differently, I'm like, I would say absolutely not. I would say no. Either you're going to tell me your needs and goals. I'm going to tell you what solution, like what design is going to work best for you. I'm going to create that. I could create 2 of them. I would always create 2, but 4 tells me that they are absolutely focused on the wrong thing and they don't know what they're doing.
Yep. I was thinking the whole time when Brian was saying that, I was like, man, I love Brian's heart. He wants to help everyone. But as soon as that individual comes to you and starts asking for illustrations up front, unless you can disrupt it immediately, unless you can start asking them, well, what's the purpose? What are you trying to do? And if they're not going to tell you, if they're shopping around, say, hey, peace, good luck, have fun.
And this person's already in process. They're in the actual underwriting right now. That's what's good. Yeah.
Carson.
Well, it's a little bit tricky too, because it's true. There are some nuances to having a good product to do banking. So you do want to have the most efficient policy. So when people are asking for policy illustrations, they're valid to think they want the most efficient policy for what they're trying to do. And so I 100% agree with you guys, but there is some aspect of we do need the right product to do this. And so I understand where people are coming from.
And oftentimes when someone's doing what this person is doing, they've been talking to other people. That's what's happening. Yeah. And the other people are talking about the product.
Yeah.
And
what I would offer, Brian, I had someone come, and I've shared it with, Steven knows about it, but it's someone come with a friend who's a financial advisor, and they advise, saw what we were created for them, found out what, brought them to another company and no longer, we used to work with them, but no longer will support IBC. And immediately, we want to help the people. And we also, there's a little bit of competition when you hear someone coming in after you've been working on something for weeks and weeks and have hours of conversation, help someone solve their problem. But when I stopped and reflected, I was like, well, I'm not competing. There's no competition here. There's so much to go around. If he ends up going with them, I wish him the best. I will help guide him. I said, hey, I just want to understand, what do you think this accomplishes? And again, asking them and figuring out where they're at and helping them. And I spent a lot of time with him. I don't know if he'll end up going with us, but it was more about his fears and mindset. He was all in, and now he's pulling back because he's like, well, I won't have anything left over. It was a whole bunch of different stuff that had nothing to do with design, had nothing to do with him having a relationship with this other guy for 5-6 years and all the other stuff. So just know it's never about the policy necessarily or about being multiple ones. It's about what do they really want. If we can get to that, then that's not going to be a problem.
Yeah.
I love it. And if you do want to go with us to get your bank going with us, you go to mentors.beyourownbanker.com. But since we kind of
that's on my name right there. Well, my name, look, mentors.beyourownbanker.com. It's like a magic.
All right, so we did get a bunch of questions while we were just chatting.
And I got a question on Instagram. Don't let me forget it, from No Name Precision. So it's kind of cool. We're getting it from both, but I want to make sure we put that in there.
Come back. So Jenny's saying, is there a certain way to combine velocity banking with infinite banking?
Absolutely. When you're utilizing the velocity banking and the HELOC portion of the money stuck in your 2x4s, before you put that to action and put that into an opportunity by running it through the infinite banking policy, now you would be making money twice. So just moving the money, and how many spokes can we put in the wheel to make it run faster and smoother? So yes, we can.
All right, fantastic. This might be just a quick one. Has anyone had any login issues with One America? I can log on, but there's no information. I called them. They put in a work ticket. 4 months now. I still can't fill out online forms.
I had that problem yesterday, and I'm sure it's just a systems problem that they got to work through. But yeah, I did. I was trying to log on for my bookkeeper to give values, and I couldn't get it. So Tim, I am dealing with the same issues. I actually forgot about it, so I'm glad you reminded me.
Here's one thing I've noticed since some of the upgrades, I've had to clear my cache more often. Like when I've been looking to help people or log into stuff, if it doesn't go through, that's been the problem for me. Like I've had to clear that once a week now for the last 2 or 3 weeks. So I'm sure you've done that, Tim. It might be something else, but that I haven't had a specific issue other than needing to clear my cache because there's too much stuff stored.
So I looked up Tim's policy, and there's just a banner at the top saying it's being updated, and so all the numbers are just not available right now. But if it's been like that for 4 months, you definitely should reach out to One America again, let them know that it's been like this for this long. They will definitely take care of it, or even just reach out to your implementation specialist.
So Navigate Your Ventures is saying, I have a couple policies with you and have supercharged my policy with you through PMC, doing well enough with PMC that an S Corp is in my near future. What's your income number to go with the S Corp side? For a reference point, her 2 side businesses should reach 120K combined.
Congratulations on the success. And I would say that's something that you want. We're definitely not financial advisors or CPAs. I know that's a switch. I would say know what's going to happen when you make the switch. It's a switch that we made with our company last year, and we ended up with like, oh geez, it came out that found a blessing in it. It was like all of a sudden I had 2 $20,000 tax bills for payroll taxes for backdating to an S Corp, like one due on 12/15 and 1/15/24, and I ended up using a policy to pay for it, creating another policy to pay taxes to make money on the taxes. But just navigate your ventures. Just know what your outcome is, know what both sides are going to be, and find someone that can really guide you on it. So I don't know if anybody else has anything else to add to the amount of income. I think income-wise, you're where you need to be to look at that, but just ask your professional CPA some more advice. So.
Yeah, I'm not a professional CPA or tax lawyer either, but just if you're looking at 2 separate businesses, 2 separate ventures, you may want to probably have it in 2 separate entities to just keep liability separated. And so now all of a sudden you're dealing with smaller numbers in each entity, so maybe it might not make sense. So there's lots of different things to look at with that.
Really, and listen again, not a CPA, can't give tax advice, but I've got plenty of experience with this. The S Corp typically works best if you're going to take an income, like you're going to take a salary from the company. And that's the real reason I've been told to use the S Corp versus just a regular LLC would be because of the payroll piece. So, I mean, lending, and I'll just speak on lending, if you're doing it individually, there's really very little you can write off. So if you lend from an entity, like if the money's in an entity and you lend there's all sorts of things that you can use as taxable deductions toward your lending business. I mean, maybe you fly out to a mastermind, that could be a write-off, to the entity because you went out there to meet potential borrowers and talk about what you're doing. If you're doing marketing or your PMC membership, I mean, that's a cost of doing business. So the entity would give you lots of ways where you could have deductions that you typically would not if you're lending individually. Let me know, Shauna, when I can interject with some of the Instagram ones. I don't want to.
Let's see. We've got 5 more on this side. Why don't we go with your Instagram one real quick?
All right. So it's one from No Name Precision, and I'll just put this out to the whole audience. And there's 3 parts to it. First, he said, "How can I use my whole life insurance policy?" But hold on, because I know you guys are chomping at answering that one. He said, I'm trying to use my whole life insurance policy as the bank. And I thought there was one. He's a business owner. So does anyone want to take a stab at that? And then I'll kind of finish it up.
What's his name of his thing again?
No Name Precision is his name or his handle on Instagram.
I mean, there's so many factors. Like we almost need more information to answer that one.
Yeah, what's his job? Like, what's his like business?
It just says he's just a small. I'm just trying to go through here. Small business owner here. So here, let me just because listen, we don't have time to go into all the nuances, but you're right. So No Name Precision. First thing, if you want to learn more about how to use, it sounds like an existing whole life policy as the bank. We have some really great videos, and I actually just created a few for entrepreneurs on YouTube, but we can get those over if you want to send over your email. But then booking a call and having us better understand your business and the different things you're doing. So I'm going to kind of hit your question just from personal experiences and the way I use it in business. So my policy has done lots of things, and Shauna, could kind of chime in on this one. But early on, when I first, started using the infinite banking concept, we had some times when the business was cash strapped. We didn't have money. And Shauna reminded me one day, she didn't know how she was going to cash her check. So I took a loan from my policy. I lent it to the company. Now, this is me personally. And that, because I'm assuming your whole life is owned by you personally, not the company. So I got to make assumptions. So I personally lent money to my company. That allowed me, a little bit of capital to pay for payroll and just kind of coast for a little bit until we had some income come in. And then my business made monthly payments back to me. So it would be similar to a business runs out of money, goes to a bank, borrows money from a line of credit and makes payments to the bank. It's just I'm becoming the bank, me personally. So when I lent the money to the company, the business paid me back, and it did that for years. We have a big copy machine. These are just.
Can I interject real quick, Chris? Can you click on his name? Because this might be one that Joe can do. Because I looked up No Name Precision on Instagram, and it looks like it's firearms. So I don't know, Joe. Do you get all the money back for every?
It doesn't allow me to. It doesn't allow me to.
Ariana? No. Okay.
Yeah, Sean, I don't know. It doesn't allow me to click on anything. He said he's in manufacturing. Sorry, there's lots of feeds on Instagram. I didn't expect Instagram to be just off the charts, but it's cool. CNC Machine Group. Oh, that's badass.
Yeah.
Okay, now we got something. So here we go. So I'm going to finish the story about the copy machine because it's equipment. And in your business, CNC, you need equipment to do business. And that equipment typically has to be bought cash or financed or leased. So this copy machine, which is one of those big giant industrial copy machines, it does scanning and all sorts of stuff. It does everything but do your hair. They're very expensive. They're like just under 10 grand. And we always leased it prior. So then the leasing salesman for the copy machine came in all dressed up in his suit. I'm like, I didn't know suits were required to sell copy machines, but cool. And he's laying out this great new machine. And Shauna was there with me and laying out all the other features and telling us how our machine is going to be outdated and it's not going to be good anymore. And then he says, and you're going to love this part. For just $10 more a month, you can have this machine and that's it. And you just continue your lease. So I'm thinking about it. I'm like, okay. At first, me and Shauna were like, oh, that's not a bad deal. Because we forgot, like now we're in old mode. And then all of a sudden, I don't remember if it was Shauna or me. I'm like, whoa, hold on a second. I said, how much is it to buy the machine? The dude didn't even know. He literally was so ready to just lease the machine. I guess everybody does that. He didn't even know the price. He's like, oh, wow, I don't know what I ever asked. I'll have to get back to you. I'm like, yeah, get back to us. So he comes back to us with the amount of the machine to buy it, and he's almost like, well, I don't know why you would do this. It's going to be outdated in 4 years or 5 years. And I basically ran the math and I said, how much would that be if I were to finance that amount? And the amount was actually less than what the lease was. So what I did is I said, all right, listen, if I was willing to pay the lease amount to lease this machine and not even own it, how about I pay cash? So I took a loan from the policy, loaned it to my company. My company paid cash for the machine. So we now have the machine up in the front office. And then the company repays me back the exact same amount monthly that we would have paid to that leasing company, except for now, when we buy the next machine, this machine could be listed on Facebook Marketplace and sold. So, with your scenario, just think about that with any of your equipment, right? So precision equipment, CNC equipment. that stuff's expensive and it's got to be bought somehow. So what if instead of financing it or leasing it, you took a loan from your policy and you bought the equipment and you made the exact same payment you would have paid to lease or finance it, and you made that payment back to yourself, interest in principal. You would take back control of your money. You would be the bank, and you would be the one keeping all of the interest that your company bleeds to all these banks and finance companies. Anyone else wants to go with that, but it's such a wild, fun way to do it because we're really talking business stuff a lot lately.
I love that. It's awesome.
Knox 714 said, "Can I pay my annual premiums before the due date?"
So typically not. Some companies do have like 30 days early that you can do. I think there's even some instances where you can pay it 60 days early, but that's pretty much the maximum.
I had One America. I paid mine about a little over a week early. And then the funds weren't available to after the actual annual date as far as a loan goes. So like I wanted to move the money out of my regular account, have it in there so it wasn't used for anything else. But then I was like, oh, wait, I guess it doesn't go to your annual date until it's available for a loan. So
that's a good thing to point out, Jason, because that happened to me too. Because I think with Mass, I did it like 30 days early, and I kept checking because I wanted to use it for something, and I kept checking, and until that annual date happened, it didn't affect my cash value.
And Shauna and Joe, this is going to be interesting. No Name Precision is precision making firearms and semiconductors.
I saw that. I looked it up.
That's pretty badass. We could become really good friends. Right, Joe?
You got it.
So also Shane is saying, shout out to the team. PMC has changed my family's outlook on earning income. We can afford groceries. The knowledge on the side of the bar is second to none. True masterclass.
Oh, that's awesome.
Shane started. I mean, Shane's a rock star. He started with HELOC and Velocity Banking, and then after he got out of some of the debt, he came and added this to it. And now, like, look, the success, right? That's a great. There you go, Shane. Do you want to come on a podcast? We want to have you on to hear your success story. It's been a couple of years now, so congratulations, brother.
Yeah, actually, to that point. So Jason just brought up a really good point. Anyone who has a policy and has worked with one of these fine gentlemen on the screen. So if you're Jason's clients, Carson's clients, Joe's or Brian's or anybody's, and you want to share your story, we'd love to connect you back with your money mentor. You and your money mentor chat and say what's happened since you've taken the leap, what you've been able to accomplish. So I would encourage anybody who's interested in that to like email your money mentor to set up time to record something. Deb is saying, if I put a lump sum on the front end, is it possible that the annual premiums for 7 years can be paid all at once? Would there be any benefit for me to do this?
Mindset.
Yeah.
Nope. Can't do the premiums 7 years in advance. That'd be a paid up and paid in one policy, which is not infinite banking.
The way that you would build this policy is mainly for the dump. So depending on what your age is and what the reason why we're doing it, the dump would be the main purpose of the account. And the monthly would be just for the benefit of the dump. I don't really like to do that because I like to do both ways. And if there was a way that you could see that the dump and the monthly would be used, like I said, that's a mindset kind of issue. You would always want to keep contributing money to the policy.
Yeah, we get that question more and more lately, don't we?
Mm-hmm. People just want to pay and get it done. That's not how banking works, and that's kind of where it goes back to the mindset.
You're right, but there are going to be like I got to go back. When I was a financial advisor, I remember this story. There was this guy. He was a very wealthy guy, and he lost. Like he went through a divorce, and she, let's just say she won, and he had to write a massive check every month to her. He had plenty of money to do it, but I remember the advisor in my office, his name was Mark, structured this, and here was the client's biggest objective. It wasn't that he couldn't write the check every month. He had the money to do it. You know, he was so soured. I guess it was a really bad divorce that he said, I physically cannot write this check I will burn it every time I write it, and she'll never get it. I can't do it, man. I can't. There's got to be a better way. So what Mark did is he said, fine, what if the insurance company writes a check to her every single month and you don't need to know anything about it and you just put money in one time? But better yet, what if the insurance company pays you interest on that money so that your check that you have to write to her, or that the insurance company has to write to her, is actually less, like it takes less money from you because the insurance company is going to kick in a little bit, i.e. interest. And Brian, you know exactly what I'm talking about, don't you?
Yeah.
He went to the insurance company and he just said, listen, here's a chunk of money. I don't ever want to pay my ex-wife ever again. I don't want to talk about it. I don't want to write a check. Here's a chunk of money. Make sure she's paid for the rest of her life. The insurance company said, no problem. And basically did an annuity and made a payment to her every single month. Never any questions about it. And then it even went further, because if she died, the guy who put the money in got a bunch of his money back. So that was like the back end of it. But listen, what you're talking about with Deb, some people do just want to just write one check and be done. I mean, that's why single premium whole life was such an important, valuable thing back in the 80s. People just had lump sums of money and they just wanted to put it in and they didn't want to have to deal with it anymore. So you could do that same strategy as that guy did for that divorce payment, but you could just do it with an annuity and have the annuity pay for the specially designed whole life so that you can do the infinite banking concept. It all works the same. So it's really just, there's always a solution. You just got to get creative with it.
Yeah, I had somebody the other day who wanted, they had someone was illustrating a single pay whole life policy, and they said, is that possible for infinite banking? And I said, well, it's not truly the infinite banking concept, because you're not going to continue putting in the deposits. You want to keep funding your policy. I said, and I went and did it while I'm talking to the guy, and I had him on a video, and I showed him a single pay whole life policy with, I think it was One America. And it had the cash value, showed the whole thing. And there it was. I'm like, well, that's a single pay one. I said, but yes, you can borrow from it and have the cash value, but look at the growth. And it was just slow, right? It was very, and he's like, oh, yeah. Now add the minimum premium. And so we did. And all of a sudden, it just, all the numbers changed. He's like, holy cow. He goes, that's awesome. I go, yeah, that's what we're talking about. And so, yeah.
You can build it for the dump, but you'd rather build it for both aspects and for the growth. Yeah. Last month, I had a guy who was going through a divorce, and he owed her X amount of money. And he says, I don't want to give this to her and lose out on it. So we're putting that in as a dump and utilizing the monthly to coincide with the dump. So now he feels better. When he takes out the loan, he's going to take out the dump, give it to her, and he'll always make money on his money, dividends and interest forever.
Stacy is saying, how do we find out the status of my husband's policy? He did the medical, but we haven't heard much since.
Still in underwriting. She's mine, I think.
Real quick, too, we should go back to what Joe was just saying. We were bringing up all these different examples of how people are using their policies for cool things, like Joe just mentioned. I think we should make a YouTube video or a podcast about like 5 or 10 different like cool things people have done with their policies that are not the norm, not equipment financing, not cars, not real estate, like the random stuff you wouldn't have thought about. Let's show examples like that. Like Joe's example is perfect. Let's do stuff like that.
I love that. I agree. Wait, even Chris, what you just said too, I was like, what? Yeah. That is creative. Wow. All right, we got 2 more questions. We got 10 more minutes. So if anybody has anything else, throw it in the chat. So Justin's saying, so when you guys do a HELOC to pay down your mortgage, would you guys pay down your mortgage with a credit card at 0% besides the transfer fee, of course, or would that be a bad idea? I know I'd have to pay the balance of the credit card within the year before he hit that 27% interest rate.
I know, and I heard that there's people that utilize the credit card to do stuff with velocity banking. I have never done it. That's too scary of a way to utilize the credit cards. I would just use the HELOC, and if you just wanted to do the way that Chris is doing, and by chunking it, you fill up the HELOC, put it down on your principal, fill up the HELOC, and put it down on your principal. That's chunking. Another way that I do it is I utilize the HELOC, put it in an opportunity. That opportunity comes in with interest. I take the interest, and that can go to the principal. That's how I kind of teach people when they're utilizing the velocity banking and the policy. We'll utilize the interest that comes in rather than utilize your W-2.
I don't know enough about it to be dangerous or say anything. You know, that's more Christy Van in regards to velocity banking. But everything I've seen Christy talking about is primarily her talking about using HELOCs or lines of credit. I think the credit card game with velocity banking, and I know it's taught out there, it just sounds risky, and it sounds like there's a lot of room for things to go wrong. I mean, let's not forget that, you know, if we enter difficult, you know, economic times, credit cards can just cut you off at any time. They can reduce your limits at any time. And if you base your entire structure around something that's unpredictable and not in your control, you're setting yourself up to fail. And listen, I'm not saying HELOCs are any better. I mean, HELOCs can do the same thing. I've had it happen firsthand twice now, where banks have literally cut my line of credit off for no apparent reason, actually none that made any logical sense. I mean, to the bank, I'm sure they got the reasons, but it's just the reason to me is banks just suck ass. So just, you know, when you start playing with that aspect, you're playing with an unknown and an unpredictable, you know, vehicle. So just be very careful with that. I like the chunking, and what Christy did with my mortgage has been working incredibly well.
One more right now. So our cruise is saying, if I loan my corporation money so it can pay off its debts, does the monthly payment the corp pays back with interest, is it taxable to me? So the spread basically is if our cruise is, you know, does he have to pay taxes on the spread that he's making from loaning from him to his company?
Yeah, if there's interest, yes. So, like, for example, I'll just go back to, you know, when I lent money to my company to buy that copy machine or to, you know, just have working capital, the payments made back to me, the interest portion of those payments, 100% were taxable. And my company at the end of the year would send a 1099. So, yes, it is. But in this scenario, if I loan my company money so I can pay off its debt, so your company sounds like you have debt in the company that you personally want to lend money to your company to pay off the debt.
Mm-hmm.
And then your company, instead of paying the credit cards, pays you back the monthly payment. I mean, that's what I'm seeing. The interest portion of what's paid back to you is taxable. You're not going to beat the tax guy. Okay. You're just not. So the thing to really look at is, you know, is paying the bank all that interest from the corporation, is that write-off? Does it outweigh paying it? Now it's still right off. So here's the other thing. I'm sorry. Let me go one step further. So your company pays the credit cards or the debts, and you get to write that interest off on the company level. If the company pays you the same payment, the same interest, the company can still write that interest payment off to you, but then you got to pay tax on it. So really it's kind of a wash depending on how you do tax. Again, not giving tax advice, consult with your CPA or tax advisor on that. But think about it. Like, if your company's writing the interest off as an interest expense and you're paying tax on the interest gained, isn't that just a wash? But yet you get all the money. So to me, that's a win. I'm not the smartest guy always, but to me, that seems pretty logical. But they said if I had I can't remember who it was, if I had $2,000, what would be the best thing you would suggest I do to grow that money?
Steven
Anyone?
usually takes this one.
Yeah.
A lot of knowns on that one. I mean, it depends on if you're trying to change or, you know, invest in yourself or invest in something else. Like, I mean, if I had $2,000 and had income over here and $2,000, I would probably invest in what I got going on up here and try to learn something that I can then take time and apply and then turn that into cash flow. That's just how I work, though, because I've done that.
Earl Nightingale says that best, man. The best investment always is investing in yourself and additional knowledge. There's no better investment you'll ever get. Now, I know that's not what people want to hear, but that is your best investment.
Yep.
You guys completely missed the memo. Bitcoin is going to the moon. Put it all in Bitcoin.
Oh, yeah, I forgot.
That's
right.
Let me go look.
Brian, like we didn't get the memo before this. So remember, we were supposed to say Bitcoin's going to the moon. So if anyone has money to invest, going to the moon. Totally joking. You know, all disclaimers should be flashing right now. We don't ever talk about, we don't sit there, and people are still. I had an old coaching client of mine message me and say, hey, on TikTok, I got a message from you saying there was this really good investment opportunity in Bitcoin. I didn't know you were in that, but should I put some money into this? And I'm like, whoa, it's not me. I'm like, since when I don't make any investment recommendations online, let alone making investment recommendations into Bitcoin, which I still would say I don't know enough about it to be dangerous and like talk about it with any real level of knowledge.
There's literally no other reason it goes up, though, is us people talking about it. That's literally it.
Right there. So listen, don't listen to any of us jokers on here.
Right.
Listen to Ray Dalio, and he says invest in yourself. So there you go. $2,000, invest in yourself.
And if you do any investments, run it through your guaranteed foundation first, and then go make a spread on it. At least be protected.
There you go.
There you go. Yep.
All right. So we got 4 minutes here. We can close it down.
Now, I got to be honest. Like, how many of you were on Wealth Webinar? Was anyone on today's Wealth Webinar with Mark Richards?
I was in the background for a bit, but I didn't catch it.
Did anyone cry?
I probably missed the beginning part. I missed the first half hour, so I missed.
You're all just a bunch of heartless bastards.
Did not see it, brother. So there's some crying moments, huh? It's a rewatch one.
Yes, it's a rewatch. Yeah. It was very, very
she was, Dexter said
yeah,
so.
see, Dexter cried. Eve cried. All right, so good. Good. It's just my team that's heartless bastards. That's all. Noted.
I'll be back. I know the story, though, and I'm sure it would have. We got a recommendation from Shane. I recommend PMC, invest in yourself, and start to network. Good group and info.
Oh, see, but there you go. It's totally, that's a great one because inside PMC is a ton of free education on how you could get your money working for you. Great suggestion, Shane. There you go. Bitcoin, 69,000 today. Going to the moon, Stephen. Edie shoulder 6 weeks ago at 68. That's not a bad day in the office. And I know I mention this all the time, but may I mention it again that the stock market, you know, that blossomed up amazing creature that is full of manipulation, speculation, and roses and all that good stuff. May I mention that it is sitting pretty much at all-time highs? Can anyone guess what that should mean you should look at? And Edie got me thinking about this. So if you're at all-time highs in an election year where the past 5 elections have looked exactly the same, especially second-term presidential elections, the market's always gone up the last 5 presidentials. And can anyone guess what happens right after the election, no matter who wins?
Crash.
So if you're at all-time highs in an election year for a president going for a second term, regardless of the outcome, what should you do?
Buy more.
Buy more. Oh, shit, I'm done. I got to go.
Don't gas prices go down too.
Down.
Don't gas prices go down this year too.
Sell.
Well, what does the number one investor of all time say? Buy low, sell high.
Oh, yeah, but everybody buys high and sells low. That not everybody, but none of the folks on here, because these are the 5%ers here. But the outsiders, we'll call them, the 95%ers, they love buying high. Just like Stephen was mentioning. I mean, is now a good time to buy Bitcoin? Oh, yeah. It's having – now's a good time to buy it. Okay, great. I'm selling. When someone says I'm buying, I'm selling. That's what I'm going to start doing.
And it's
So you're buying the video, I'm selling. Warren Buffett did just offload a whole bunch of Apple. He's sitting on literally, when I say piles of money, I mean like stupid piles of money, more cash than Berkshire Hathaway's ever sat on. And he actually went public saying that he I don't know how he said it, so I don't want to misconstrue it, but he basically said he didn't like what was coming and he sees a slowdown happening and he's going to buy low.
What is it like when you buy high and sell low? It's fear of missing out, fear. When you sell low, it's fear of losing more. It's fear. Fear drives the market.
Yeah, I mean, Mark said buy more silver. Sure. I mean, you can never really go wrong with physical metals. Just make sure that it doesn't. I don't think it should exceed 10% of your investable portfolio.
Yep.
Yeah, billions and billions and billions.
A second-term election. Does he know who's running?
Yeah. Wait. No. Do they know who's running?
I don't think that guy knows who's running himself.
I don't think a certain somebody knows much of anything about
me?
What's running, who's running. Yeah, Joe. Of course, yeah, Joe. You guys thought I was talking about Joe? You thought I was talking about that Joe? No, this Joe. We don't even call that Joe anymore. We call him Dude or Dud or whatever. Depends on the day.
Jurassic Joe. We got Jurassic Joe. Here.
Jurassic Joe. Yep. He's project 200 billion cash by the end of this quarter. There we go. Or he projects, sorry. I don't know why I said project. Projects 200 billion in cash. Just think about that. Like the number one investor, if you will, you know, one of the, I think the smartest minds in investing who actually can still articulate it in 5th grade level is literally hoarding cash right now. And the people you work with, the people you're around, probably your family members are dumping more and more and more money into investments when the number one mind in investing is doing what? Selling and sitting on cash. But actually the number two, or like the two top people, whether it's Ray Dalio and Buffett, like combine those two and then throw in Bezos and, you know, might as well layer on Mark Zuckerberg and all them. And like, look at what they're doing. And yet the majority of the people do the complete opposite.
What's the quote?
And we wonder why not everybody does IBC. There we go.
There you go.
Here's your card. Here's your sign. Here's your sign. Sorry, not card. Here's your sign.
All right. With that, I'm going to hop on a client call right now and help them with IBC.
Perfect. And with that, I just sold my Bitcoin.
There you go. And you made some money, didn't you?
Yes, I'll buy when it goes on sale.
Yeah, you see, making money never sucks, but losing money, well, that's another story. With that being said, thanks everybody for joining us for another Ask Me Anything happy hour. We'll see you next time.